one of the reasons I've said that is because I've taken a trend line between the two previous peaks, okay? And I've done something like this. And if you extrapolate a move up, right? Look at this right here. On the weekly time frame, you can see that the two previous tops of Bitcoin's price action form a sort of asymptotic resistance, a border. But you can also see that this 10 to 12 year parabola is meeting it. So there's confluence there. I think that once you get in this region, you do get a significant pullback. The other thing I'll say is this, though. 150 can be technically a good place to set a target, but it is a low ball. I wouldn't be surprised if we went much further. Why? Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for almost daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is May 8th, 2024, and I have an update on my Bitcoin targets to the upside. Okay, I not only have an update on my immediate short-term targets, but also on my high time frame targets for Bitcoin in this bull run. I'm also going to talk about altcoins and what I believe that they're doing at this very moment. If that all sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get started with Bitcoin. Right. Nothing's changed except that I'm even more bullish than before. And here's why. Okay. So the crux of my Bitcoin trading plan has been that for the past 2 to 3 weeks, we've been in this falling wedge, which is typically a very bullish pattern. Yeah. And this falling wedge has broken out, and now we were creating a retest. And this retest has been going on for a few days. I think it started on Friday, went throughout the weekend. This is very bullish. People do not understand. A lot of people who do not know how to read price action are confused as to what this is. Okay, another way to look at this is this. Look at this as a W reversal, but slanted, a breakout, and a retest. The fact that the retest is dipping ever so slightly below this line doesn't mean anything. Remember, when we put lines on charts, it is inaccurate. Sometimes, yes, the price does react to the penny, to the dollar on the line, but more often than not, it's best or more accurate to consider these regions, these zones, as zones or areas, right? Areas of support and resistance that are not necessarily discrete lines. So this is why you can see a lot of wicking and stuff like that, especially when you're when you're working on small time frames with high time frame price action. You shouldn't necessarily be too caught up in wicking up or down. Okay, so essentially what this is a breakout, a retest. So we're still likely breaking out, and the target of this hasn't changed. It's still going to be the top of this falling wedge, right? That's, trading, pattern trading 101. The target of your falling wedge is the top of the wedge, thereabouts. Another way to do this, all right, just like I said in last video, is you take your W, the height of the W, superimpose from the side of breakout thereabouts, you get this target. That's still my target, more or less, but I'm going to tell you why it's not my target. In the immediate short term, it's not my target because I'm seeing this move. The update is this move is now a candidate for a standalone move. There no longer needs to be any sort of move, like whatever comes after this doesn't necessarily need to include this in it. How do I explain that best? Okay, there is a high likelihood that what you're looking at here is what we call a zigzag, right? It's a 5-wave up, 3-wave down move, but it's not pure impulse. It's not pure impulse in the sense that you can expect this to continue as part and parcel of this. For me, when I'm looking at this move, and when we came down and hit the 0.5, because remember, a zigzag hits at the very least the 0.5 Fibonacci retracement of the preceding move up. Okay, the preceding 5 waves up, the 3 waves down has to come to at least the 0.5 Fibonacci retracement. Then you have a legitimate zigzag. At the time I did the last video, we were on the line and we had in no way, shape, or form come all the way down to the 0.5. So whatever you saw here theoretically should and could have been part and parcel of an impulse. And should that impulse have continued, you would have to then factor in a retracement upon all of this. I hope I'm not getting anybody lost. All I'm saying is this is more bullish than ever. Why? Because let's jump down to the hourly time frame so I can better illustrate this. What I'm trying to say in layman's terms is that this all here is this right here is the pivot, or the last it's the last aspect, it's the last it is the last movement of this reversal. Whatever you saw here to support the price, to hold the price, to eventually reverse from this downtrend. This is one AB base, this is the second AB base, and this is simply a pivot. All of this is part of a reversal pattern to move the price. And so that's my new kind of way of looking at it in terms of what makes most sense and what is most likely based off of what I'm seeing. And I'm going to tell you why in a second. I don't think this is pure impulse. Not just because, one, it can be a pivot because it came down to the 0.5, but also I'm going to tell you why. If we start moving now, which it looks like we're starting to move now, it cannot be pure impulse, okay? So if that's true, all that I just said, you can start counting impulses from here. And if that is the case, then the retracements can be shallow and you can still continue. Does that make sense? Right? Because you don't have to come back and retrace on this or factor this into your retracement. You can just continue to move from here as the bottom, and this would be the base, the new support, previous resistance of your falling wedge. I hope I'm not getting too technical. I know that sometimes certain viewers are not as versed in Elliott wave analysis or whatever, so it seems a bit arcane, a little cryptic when I try to explain. But if you have difficulty understanding what I'm trying to say, please let me know. I'd love to understand who gets it, who's lost, and if you're lost, I'll try and find better ways to explain it. But that's essentially what I'm seeing. Another reason why I don't think it's pure impulse, and that our post-halving impulsive uptrend starts in this region, is because in a typical wave 1, wave 2 scenario, you have the 5 waves taking around the same time as the 3 waves. Okay, so the 5 waves up take around the same time as the 3 waves down. Wave 1 and wave 2 are commensurate on a time frame. That's one way you can come up with time predictions using Elliott wave theory. Okay, so this is not the case in this case. So this is another reason I don't think this is pure impulse and it's rather a pivot, because if you take this purported wave 1, you would see it's a 4-day, 3-hour affair. And then if you take your purported wave 2, you've only moved 2 days, 16 hours. So it's not even close. So if we do move now, which it looks like we're doing, then it's another reason that this is likely a pivot. And your next move is an impulse from here up to the target and retracing upon this midline. Okay, why? Okay, it's very clear. Look at this midline and forget my channel that I've drawn. Forget that that's even there, because that could be wrong. Just look at what the price action is telling you. Look at the price action. Every time we get in this region, there's resistance. We come above it. Oh, resistance. We fall down. Resistance. Fall down. Come back up. Resistance. This is important. So for me, just as an analyst looking at this chart, any impulse going up would have to logically retest this right here, whatever you want to call it. But I believe very strongly that this is indeed the heart or midline of this 60-day channel. It'd have to retest this previous resistance, staunch resistance, as support. So again, this is very nice if that's indeed the case, because that means that your first wave is a wave up, hitting the target, resistance, support right here, support right here. This is a very nice target. And of course, it is the top of this wedge. And of course, it is the target of this inverse head and shoulders, right? Take this inverse head and shoulders, you know, take the height of it, superimpose it from the side of breakout. You get this target up here, and it's the top of your wedge. I talked about this in last video, so I'm not going to rehash that. But essentially, that's your first impulse. This is your retracement, right? Your first impulse, your retracement, and then you go. Okay. So when I say, let's get more specific. I'm going to give you a specific target. May not necessarily be the same exact target as I gave you last time, which was, I believe it was 73.2. Okay, this may be, I want to take this inverse head and shoulders and use this as a neckline. I think that is the most accurate. Superimpose it from the side of breakout. Oof. Yeah, I think it's coming up here. I think it's coming up here. Right? And then a retracement down here. Maybe not all the way down to the midline, but close. Okay? So about 72K, not too far off from what I said before. And like I said again, would not be surprised if we did get this sooner than later based off of what I'm seeing in the charts on the smaller time frames. Let's try and take that target again, but let's use the height of the falling wedge here. This is the broadest height or the highest height, superimposed from the side of breakout. Yeah, I like it. Okay, about 72.2. Okay, it's not far off once again from the previous target, but that is just the initial target. And if we do get a move like that and it starts 1, 2, remember again, wave 1 and wave 2, the time for this is going to be approximately the time for that. So anybody taking profit here and then thinking that we're going to go further down is sorely mistaken. That is technically, theoretically, if that happens, if we do get a move from where we're at right now, about 61.5, right, to 72, 73K, that's the beginning of the post-halving bull run. That move can be expected to continue impulses, right? Because after wave 1 and wave 2, you get wave 3, which is typically the fastest and the longest and the strongest of the impulses. And then after that, wave 4, it's a breather. And then wave 5, okay? Where do I see this going? I do not know. I don't know on the small or medium term time frame. Other than this target right here, I wouldn't set any medium term targets for the time being based off of the information that we have on the chart. That's where I get into my high time frame analysis in Bitcoin. I hope you're still with me, guys. If you're getting value, please like, share, and subscribe. Consider buying me a coffee on the pinned comment below. For that, let's look at the higher term, a higher time frame chart of Bitcoin. Okay, so did I change charts here? I want to change charts. Okay, now I've gone onto my master chart, and there's a reason I went onto this master chart. I've been saying that I like 150K as a target for Bitcoin. One of the reasons for on the high time frame, one of the reasons I've said that is because I've taken a trend line between the two previous peaks, okay? And I've done something like this. And if you extrapolate a move up, right? Look at this right here. On the weekly time frame, you can see that the two previous tops of Bitcoin's price action form a sort of asymptotic resistance, a border. But you can also see that this 10 to 12 year parabola is meeting it. So there's confluence there. I think that once you get in this region, you do get a significant pullback. The other thing I'll say is this, though. 150 can be technically a good place to set a target, but it is a low ball. I wouldn't be surprised if we went much further. Why? Look at this. Whoops, let's draw that again. What does that remind you of? That it is a textbook cup and handle pattern. You are putting in a textbook cup and handle pattern. Now, what do you do with cup and handle patterns? Well, they're bullish reversal patterns, and you typically get the target of a cup and handle pattern by taking the height of the cup, superimposing it from the site of breakout, and what do you get? What do you get? Well, you get the actual midline of this high time frame channel that you've been in since 2013. Okay? I am not ignoring that. Just like on the small time frames, let's go back, because I really hope that you understand what I'm trying to explain here. On the small time frame, if you look at Bitcoin, basically what we've been dealing with for the past 3 weeks, we've been dealing with, on the smaller time frames, midline resistance. Okay, we have this 60-day channel, and this is, basically how it really pays, quite literally, to understand the price action of a channel. Okay, I always say on this channel, when you're looking at channel price action, you have your support, you have your resistance, and you have your midline. Your midline is resistance when you're below it, right here, and support when you're above it. Right now we're below the resistance of the midline, and we have been since mid-April. Resistance, come above, resistance, come to resistance. Finally breaking out of that midline resistance is what I'm talking about. And then you come back and you retest that midline resistance as support. That's basically the first move I just talked about earlier in the video that I see Bitcoin doing, first going up to 72, 73, and then coming back to the midline or thereabouts close to the midline to retest it. Now, remember the midline, because when you're talking on a higher time frame, you're dealing with the same thing, okay? So on a higher time frame, and you look at this channel, again, a blue channel that Bitcoin has been in, but now this is a even longer channel, a 4,000 plus day channel, right? And so because it's higher time frame, it's even more likely to yield the pattern, the effects of what we see typically on these charts, right? Higher time frame, more confidence in the moves you typically see. So that midline is going to be resistance. If Bitcoin has like the maximal move of this bull run, it cannot be beyond that midline. So if that happens, within the next few weeks, because this is a rising midline, it's hard to say, but this is essentially the bull market top. This midline, this is what I'm seeing right here. And I can try to give a figure for it based off of this, the height of this cup and handle superimposed from the site of breakout, and where is the where is the neckline? It's there, approximately here. But essentially, this is why I think 300k, 290 to 300k is my top. And why is it? Now let me address the idea that, hey Dean, you showed us something cool and you've been saying 150 for the longest, and why isn't 150 now the target? All right, why are you saying 300k and not 150 anymore? Well, because like I said, you have this target of your inverse head and shoulders, or sorry, not your inverse head and shoulders, your cup and handle. And if you did go and hit that midline, you would be going above that. But again, wicking above doesn't mean anything. And that is natural. And that is actually what we should expect. We should expect a wick. Because this is such a high time frame, that wick would be $100,000, $120,000, $140,000, $150,000 wick. This is why my new target for Bitcoin in this run is not 150, but 100 or 290 to 300k. And I do expect to wick above this 12-year resistance, right? As well as this trend line. But I expect also thereafter to come back down and retest or what do I expect? Let's see. Here's what I expect. I expect all of this, right? Let's say we run and we continue to run. That's the blow off top. Remember, we haven't seen shit in this bull run because the move that comes here is the real impulsive move. It's the real sort of blow off top. It's the real like straight 180 degree like face melting price action that we've been waiting for. All of this is kind of getting to the start line and then you go up. But when you talk about a retracement, we can talk about this obviously much later when we start preparing for the next bear market. You're going to have to take all of this price action into consideration. So any retracement in the bear market will be a retracement of all of this. Okay, so that is something else. And if this indeed is a cup and handle that you're dealing with, I'm not surprised. I won't be surprised if you pull one of these. I know that sounds really terrible and that looks terrible, but typically these cup and handles, they break out and they retest before they break out in earnest. So, yeah, that's another discussion for another day. But in terms of my high time frame target, I'm looking more at 290 to 300K for those reasons. And to finally, round out this video, I know it's been a little longer than usual. Let's talk about altcoins. So the first thing I want to say about altcoins is this. If you look at your Bitcoin dominance chart, you should be very excited. Okay? You should be very excited because you're getting this move down that you've been waiting for. Okay, let's go on the 4-hourly time frame. You can see it really clearly there. You have this rising wedge, okay, that broke down, and ever since we've been retesting previous support as new resistance. Just like you retest previous resistance as new support in a bullish trend and a bearish trend, you do the opposite. And this is a very nice double top that you see here. The next move is down. That is extremely attractive. Basically, that means that altcoins are going to start beating Bitcoin at gaining market cap. And on the daily time frame, it's even more exciting because you can see the stochastic RSI is topped completely. And so you have this double top, you're coming down. Now, going and looking at altcoins specifically in your watch list, what you should see is Bitcoin up a little, altcoins up more. Okay, and as Bitcoin was falling on the smaller time frame, if you've been paying attention, while Bitcoin was falling, altcoins were actually holding steady, if not rising. That's exactly what you see in an alt season. So this is again another reason I believe that Bitcoin has either bottomed out or starting to rise because altcoins have the gall and the temerity to start moving up. And so this is exciting. This is what I'm seeing on the charts. So I think that as Bitcoin starts its move to 72, 73K, altcoins go much, much higher and they start their bullish run from their bear market lows. Most of them are in their bear market lows. Guys, I know it's been a long video, but I hope this has been helpful. Hope it's been useful. Like, share, and subscribe if you got value. Consider buying me a coffee at the pinned comment below, and I will see you next time. Take care.